Hope everyone is well and hope everyone had a good weekend. Anyway, first things first is the DXY. So with the dollar, everything's looking pretty bearish right now. And we are stalling at the moment, so it looks like momentum is starting to run out a little bit. But at the moment, USD is still bearish. We're still very consistent with the lower lows and lower highs, as we can evidently see here. Of course, at the moment, market's about to make, or is making a new low. So the expectation this week is, okay, if the market does stay bearish, I think some really nice intraday opportunities could come around. Of course, you've got a brief pause here in the market, nice drop to the downside. Still a little bit of a gap there, price can go look to fill. I would suggest keep an eye on a pullback into this 97.8 area. I think that's a smart place to be looking to short. And keeping it relatively simple, I did say that for my personal kind of trading, I'm not really looking to short the dollar because the market has been falling for quite a while. We're becoming quite corrective. So I'm almost waiting to see if potentially we could reverse this or if more momentum can come into the market. If I can see a very strong drive lower, that will give me a bit more confidence that, okay, this trend is still healthy, still likely to continue for another big swing. Then I'll be interested to find some shorts to get involved myself. But from a swing perspective, now's not the best time to be looking to short the market. Intraday, however, that's a different situation because you're looking to be in and out within the day most likely. And if we can see a healthy pullback into that zone, I think that's still a very smart place for a short. Even this area here as well, a slightly bigger pullback, which may even interest me as well. I like this brief range here, strong drop to the downside. That as well could be a smart place for some downside, depending how we get there and depending how we react as well. But 97.8 and 98.6, two areas to consider. At the moment, support looks like it's doing a pretty good job at holding price. We're very, very flat right now, so difficult to gauge what price next move would be. But should it be to one of those two areas, naturally we'll have a bearish bias and naturally looking for a sell opportunity on the dollar. And of course, some buys for EURUSD, which is pretty much looking exactly like the DXY, but just the inverse of it. Clear uptrend there, clear higher highs and higher lows. But again, for the most part, we are still very, very corrective. So I'm not really liking the price action in terms of looking for a big swing for EURUSD because it's been bullish for a while. We're still very, very corrective. Not really what I want to be seeing if I'm looking for a big swing again to the upside. But again, intraday, I think is still a very good opportunity because you're not looking to hold the trade for too long. Of course, you got prior resistance here will be turned support. You've got consolidation here, which price spent a few hours in before a very nice sharp break to the upside. I think a pullback into that area would be a smart place for a buy. And again, a swing back into resistance and maybe beyond that as well. So the way I look at EURUSD, still bullish market. If we can see a healthy pullback, very nice opportunity for some longs, of course, depending how we get there, depending how we react with the level. I wouldn't just blindly buy, but if things look good, we're seeing healthy rejection. Yes, I think that could be a nice buy. Again, keeping it intraday. And then if this is the high we pull back from, naturally targets back to the high make the most sense. But again, if I'm going to look to buy euro, I need to see some really healthy momentum push to the upside. Something like this will tell me, okay, the trend is still healthy. Euro probably does have another big swing to the upside. If I can find a good pullback, I'll be more than happy to buy it. At the moment, that's not quite the case. We're still kind of operating within this bullish channel here. So not really too interested about trading within that. But again, lower time frames, I think there's some nice opportunities there. In terms of pound USD, so kind of the same situation as euro. Trend is still healthy, still pushing to the upside. Basically, since the start of the year, since Jan, we've been heading to the upside. We've taken up major highs to our left. We just saw another bullish leg before the end of the week, clearing highs out. So again, market still trending pretty well. We do have this brief range here as well, which I like the look of as well with this swing high. Same situation as EURUSD. I believe we could pull back into that area. So far, I like how price is pulling back as well. It's nice and slow, nice and corrective, which does imply that this move is likely to be a pullback for us to head higher. So that's a good look there for pound USD. So definitely keep an eye on this zone, 1.363. Again, if we can see some healthy rejections, maybe some nice double bottoms on the lower time frame, I think that'll be a smart buy. And then keeping it simple, no need to do anything crazy. A push back to the swing high. I think that makes the most sense there for pound. Again, we are a little bit fatigued, a little bit corrective, so I'm not necessarily expecting a humongous move to the upside for pound. I do think a bigger pullback is on the horizon for quite a lot of the USD pairs, but for now, still bullish. So again, intraday, looking for the pullbacks, buying opportunities back to highs. Dollar CAD's a bit of an awkward one. I still like the shorts. I still think we're likely to keep falling, but with the awkward wick we had at the end of last week, it just makes things a little bit because we had this huge wick, which of course successfully retested this area, which is what we were talking about last week. I said I was either looking for the retest of the high here or the intraday opportunity for the retest of this level, which essentially is holding, but it just made things very awkward with a huge wick down the 4-hour chart. Of course, the hourly chart had a big run to the upside, but we reversed, which is what gave us the wick on the 4-hour. But it just made things a little bit awkward. I still do fancy a big sell. In terms of opportunities to enter a trade, it just is a bit awkward now. I still would prefer an entry up at the highs here so I can get a stop loss, pretty much above the highs, away from all the noise. So that would be my preferred opportunity. Again, there might be some intraday opportunities off the retest of this zone again, since it's now back below and potentially could act as resistance. I think it just doesn't look as good as it did last week. So at the moment, I'm kind of just staying away from dollar CAD unless we do get that bigger pullback into this zone. But yeah, for the most part, still very bearish for dollar CAD. Again, USD is still generally quite bearish as well. Very consistent lower highs. And to me, it looks like price has printed another one. And we're likely to return back into support, which is around 1.355. So possibly some shorts on the retest there. It looks a little bit awkward, so preferably I'll stay away. I like the opportunity a lot, but again, I'm not too sure if we get all the way up there. In terms of Aussie dollar, another awkward market. Again, still kind of operating within that ascending channel. We've been doing that for quite a while. I said I'm looking for a push to the upper end of the channel. I still am, because I think there could be some nice shorts there around 0.66. At the moment, looks like some resistance is stopping us at the moment. I did say some buys on the retest of the trend line could look good as well, because we just had a massive fake out to the downside here. So potentially the retest and a continuation. Very common pattern. After we do see the fake out, price would normally come back to retest the level it faked out, or the area it faked out before continuing. In this case, it hasn't done it, but it could still go and do that. So I think the buys still look good there. And equally, I like the sells as well at the upper end of the channel, away from all the noise, where again, potentially another lower high could form, another swing back down into the low end of the range, maybe a breakout as well. So with Aussie dollar, you can see the dotted line there we've got running through the middle of the channel. This represents the 50% point of the channel, the median, the middle. We don't really want to be finding entries in that area, because that's where the most speculation, the most indecision will be. You want to be to the extreme, so right at the high, right at the low. That's where the most opportunity will form in patterns like these. So when price is kind of stalling in an area like this, I want to stay away, wait for price to come back into support, wait for price to come back into resistance, and then look for opportunities off the back of that. At the moment, I would stay away, but buys look good around 0.647, sells look good around 0.66, and yeah, just basically waiting for price to get to one of those areas. New Zealand dollar, not a big fan of this one, to be honest. Not seeing a whole lot of opportunity. I can see we are, again, similar to Aussie, stuck at resistance. Yeah, there's a kind of slight channel going on here, but really, I'm not looking to do too much with the New Zealand dollar, to be honest. There might be some downside. We might wick into the up end of the channel before a bit of a sell-off there. We are quite ascending in nature. This is becoming very corrective, so that could develop. Not really something I'm looking at. Aussie dollar is a lot more clear cut, so that's why I like that opportunity a lot more. New Zealand dollar, I can see price respecting this resistance, but it's just not an opportunity which I'll look to trade. I would suggest keep an eye around the up end of the channel, because I've got a feeling price is going to push through the high, which is probably going to take out highs above here. So if you could wait for price to push through the high, get a strong reaction, and then put a stop loss above that, that gets your stop loss above all the noise in a very safe area. And if the rejection is good, entries, and hopefully we can see a swing back down. But yeah, I would wait to see some healthy rejection before jumping into a trade around the up end of that channel. But again, not a big fan of New Zealand dollar. Gold, I think gold's quite interesting. We've had a bit of a bullish morning for gold, but I'm still pretty bearish. If you didn't catch the analysis on the weekend, which I posted for gold, well, for numerous markets, but gold included, you can go check it out. But to summarize, I was basically saying I think gold can still see more downside back to 31.50. The way price has cleared support here. This was our last swing low, which gave us our drive to the highs, giving us our higher high in this bullish sequence. So I didn't want to see last week price break through this low. If we broke through that low, that's a break of structure. Again, I'm still overall bullish for gold. I still think gold is likely to return back to 3,500, back to the all-time highs. But now that we've broken through these lows and we have kept up this bearish structure, this tells me we're more likely to see a bit more downside before maybe those big buys do come along. So I did say keep an eye for the retest of this zone. And I think that's a great place to be looking to short the market, especially intraday. I probably wouldn't get short just yet. We've had a very strong rejection at the lows, and this is kind of our first drive higher. I'll look to see if we can put a second one in, or maybe even come back and retest that zone slightly higher up. But yeah, my expectation for gold is another lower high, basically just continuing the pattern as we've been seeing, and push back to lows. And then of course we've got that 31.50 area just below us. But yeah, long term still very bullish for gold, of course, but just maybe for the next week or two. Sales look good. Silver's interesting, still respecting support. Again, I did consider looking to buy from this area here last week with this candle here, which I'll probably be at break even if I did take the trade. But I was more interested with a slightly deeper pullback with silver. I like the looks of this level down here at 34.86, which of course is the big level price broke through before we had this consolidation. You know, price was rebounding within that level and key support around 28.7. Then recently we got the strong break to the upside, and I would be very hopeful to see if we can get pullback to retest that level. Since we had the break, we've had no retest of the zone. So ideally, I would like to see price come back, retest that area. You can see there's a brief pause there as well, which I like to see. Price kind of moving sideways and suddenly a big burst of momentum. If price can come back to tap that, I think there's a good possibility more buyers enter the market at that zone. That could take silver to the upside for us. So keeping a very close eye around 34.8. That's the area which I'm looking to trade from. I have to admit, we are showing a lot of signs of rejection at this zone. And I think there's a possibility we do see some upside from here. But the way I see it, this is pretty much like a consolidation. We were looking at this head and shoulder pattern last week as well, which did kind of work. We just haven't broke through the neckline yet. But yeah, I'm going to hold out to see if I can get my preferred level. If we can stay nice and corrective, that would be beautiful. And then hopefully find some entries there. Somewhat of a bearish channel here. Take some longs, targets back to high, and so on and so forth. I think we can go a lot further, but for now we just target the high there at 37,290.